Hello guys. We're gonna go over the plan or at least the charts for this week. We're gonna start off with SPY. So I want you guys to see here SPY. Notice how we formed this pattern onto into resistance, rejected, and then we came down, right? So this week, what we're gonna watch for is this support here that we kind of broke up, came back tested, and then just took off. We're here again. We're here at this level again. So what are you going to watch for? You're going to watch to see if 389, if this level holds, and then we can get a small bounce to test this trend line, which is your lower highs trend line. See high, lower high. So possibly if we do get a run up, reject somewhere around here, which would also be this zone, right? You see, we tried to get back above and we couldn't. So if this area holds the 389, 390, if buyers are able to defend here, come in and push this up, look for a rejection around here. Lower high. Okay? A lower high. That's probably around 405. Now, 400 is a big resistance. If the market is able to clear it, it can squeeze up to 405. That'll be your next level, 405. Okay? Now, if buyers come in and happen to push it above this trend line, this yellow trend line, then that's going to attract the breakout traders, and that can push it up into 410. 410. This is where sellers will start coming in. Sellers will start coming in. Why? Well, here we dropped straight down. We had a support, right? Up. This should have stopped or at least paused for a moment before breaking down, and it didn't. We went up and we just sliced right through. So this level was never tested as resistance. It was support. We failed to hold as support. So now what we have to see is if the market on the way back up will respect as resistance now. Okay? This level has not been tested since the breakdown. And a breakout, whether you break up or down, no matter which direction you break into, it always comes back and retests. Always. Even if it would have came up here, like for example here, you see how we came here, test, and then we just took off. We never tested this again. We are here now, right? And then this time we sliced through. So this is no longer support. Now we're going to watch it as resistance. Okay. Now, if for whatever reason we do not get a push up and we just lose this support right here, then our next support is 380, right below right here, 380 to test this right here. 380 doesn't hold, then we're going to come test this one, which will be around here, the green zone. Now, what I want you guys to see is here, look at this crossover. You see this crossover here? You see this crossover? So that's letting me know that a bearish momentum, meaning a push to the downside, it's near. It's just around the corner. I need to be careful with that. As long as this is crossing over, I need to be careful with price up here. So again, I'm watching 389 as support. We either bounce or we lose it, come down here. If we bounce, we test up here. That's for SPY. Let's go to QQQ. Now QQQ has the same thing. I want to show you this right here. This was the original head and shoulders before we sold off, right? Then we try to work our way back up. I don't know if you guys remember this when we were trading this. Then we try to come back up. We failed so many times until we finally were able to clear. We back test and then we took off. right? We took off. We never tested this zone again. Just took off. So guess where we're at right now? We never tested this zone either. Notice how we broke to the upside. This zone was never tested again after it broke up. It kind of got close, but it never really tested. And it just continued. So this was untested. This was untested. So the market never forgets levels that it doesn't touch. It'll get there, maybe not the next day or the following, but it'll get there. It'll get there. Here we are now. So what are we looking for? Well, now that we are trading in this pattern, we were in this pattern, which is a wedge on the way up into resistance. We broke out to the downside. Once we failed to make a higher high, that was a sign of weakness. Now we have lower lows. Okay, so any rally from here, 293, 293 is your support. 293 is your key level. From here, if we get a bounce, you should bounce to 306. This zone right here, there's sellers waiting here. We have sellers waiting here. So as price pushes up into this resistance, it's going to start to reject. You're going to see it start to reject. Now, what we will want to see is how many sellers is it here? Is it more sellers than buyers? And if that's the case, we're going to run into this resistance and reject hard, come down to this area where buyers need to come in and defend this next support. Okay, now if we are able to clear 300, 306, 309, 309 should be the highest. Should be the highest. Now, I'm not saying they cannot squeeze to 315. It is possible. It is possible. So have that in mind. If they do happen to get above 309, we are heading to 315. And notice that even if we head to 315, it'll still be a lower low. I'm sorry, a lower high. A lower high. Even if we test here, 315, it'll still be a lower high. Okay? So we got lower highs followed by lower lows. That means that we are trending down. When we have when we have higher lows with higher highs, that means we are trending up. So right now we're trending down as we make lower highs, lower lows. These are your levels to watch for QQQ. Also, keep in mind this crossover that we have here. This means that a bearish momentum is going to start coming in. So you want to watch this and you want to watch price. If this continues to cross down, then price should continue to follow. But if this reverses and it curls to the upside, then price should start to pick up. Okay? So that's what we're going to watch for. Look at this. Look how many times it's tested. We're here again. This is a big level. This is a big level for the market. So this is your key level, 293. Let's go to Apple. Apple, same thing. Look, we were trending down. We tried here to break up, double top, rejected, came down. We made our low. We broke the downtrend line. Notice how we were trading under this line? Well, we were finally able to break above, right? Now, this is what I want you to see. So we broke above, okay, into resistance. Notice how it pulled back to backtest this breakout. We ran up. We haven't tested yet. We ran up. Notice how it comes back to backtest the run up, the breakout. We hold. We also make a higher low. We also make a higher low. So right there, higher low. Oh, you can't see it, but it's right there, higher low. Higher low, higher low. So notice how here we broke out of this range, the downtrend, broke out, and we worked our way to an uptrend. We worked our way up to an uptrend until the uptrend ran into resistance and it couldn't go any further. So what happens here? We reject, we do a lower high, and now we start to work our way down. We start to work our way down. So as this is here, we should start continuing down, down, down. If we lose 154, let's just say 155. If we lose 155, below 155, we have these levels down here that we can target. Below 155, we have these levels that we can target. And these levels come from here. This level comes from here. This level comes from here. Okay, so these levels come from the past, which means that we will test in the future. We will head down here to the future. So I want you to look at SPY. Look at where Apple is at. Apple is all the way up here. Let's look at SPY. SPY is already like midway. QQQ is also midway. Compared to this low, we're midway. Look at Apple. Apple still has a long way to go. Apple's lagging. Apple is lagging. So whatever Apple does, the market will follow. The market will follow. So watch Apple. Apple. 150, 155 is your support. If we are able to hold above 155, we will test 162, 160, which is really hard resistance, right? So if you're not able to break 160, don't be surprised. We haven't been able to do that when we're trying to break down, and then we finally able to broke down, and now we're stuck under it. Okay, we're stuck under the 160. So 160 is a big resistance. If 160 happens to break and clear, we can see 162.5, 165 max. Max. And even if we move all the way up to here, we will still be doing a lower high. High, lower high. Even if we touch somewhere around here, it'll still be a lower high. Now, this area right here, it's open and it's very, very possible to be tested. Why? Because we never tested that level when we broke down. We just broke down support. It was support. We broke down and then it never got tested again. So we don't know if this is going to hold as resistance on the way back up. We don't know how price is going to act here because we never seen it before come back to it. Okay, so when price does come back to it for the first time since the breakdown, then what you're expecting to see is probably a rejection. Why? Well, because on this fall, it left sellers. Like on this fall, there's traders that are probably like, oh, I missed it. I'm too late. I'm not going to chase it. So what are they doing? They're waiting for price to come back up to test the breakdown, and then that's where they will enter. This is where a seller will enter to sell it back down. Okay, so this is a sell zone. This is a sell zone where sellers are waiting, but if they want to squeeze the shorts, they want to squeeze the sellers, they can take us all the way up to 165. Okay, have that in mind. Now, below 155, we have these levels below. We got 149, 147, 140, 141. It all depends on how hard the market sells. All you can do is have your levels, and then when the market opens, your intraday, notice how it respects, right? Now notice on Friday, look at Friday. Friday, we already had our levels. We already had 160 because 160 has been here since last week. So on Friday, as you see Apple come up, you see Apple had an issue breaking up right here. That's letting you know Apple is weak. That's one signal. It tries again. This time it actually broke up. It actually managed to break up, right? But then look what happens with the following candle. So on this breakout, this green candle right here just attracted all the breakout traders that are waiting for this to continue up into this next level. So notice how I have my next level. So let's say this does break up. How do I know how far up is going to go? Well, I have a level here. So that means that I'm going to at least ride from here to here. Okay, from here to here, it's like 2.5 points. That's all you need. But in this case, you get in here, right? And let's say you're already in long. Let's say you're in long. You took the breakout. You didn't wait for a retest. You just like, whatever, I'm getting in. You got in. And then we get this red candle. Now, when do you get out? Well, you get out the moment we get back below it. The moment we fall back below this line, or whatever level it was your entry, that's your exit, because that's letting you know that this is not going to happen. This is a fake. This was a fake. This was a trap. This is not going to happen if we're falling back under it. Now, another pattern that it gave you here is a head and shoulders. You have a shoulders, you have the head and the shoulder. So all you're waiting for is for this neckline right here to break. That's what you're waiting for this neckline to break, for you to get in on your short. So you see this, right? The market is trading. You see this. Your entry short would be somewhere around here. You can enter short somewhere around here with the goal of start to breaking these levels down. This is the head and shoulders. This is the neckline. Now this pattern breaks down. If you go to the patterns, you will see that this pattern has a tendency of breaking down. And what do we have here? Breakdown. So that's how you read the intraday levels. That's how you read the intraday levels. I'm going to go back. I'm going to go to SPY. I want to show you guys how you can find, how do you enter your trades when you have already your levels. So you already have levels. Hold on, I'm just adjusting this. Let me highlight the pre-market. Okay, so you already have your levels, right? Your levels are already established. The market opens. And here we are. You can add average lines, the 50 SMA, the VWAP, the 200 SMA, and that also help. That will also help. So I'm going to add the VWAP so you guys can see. Okay, it's really quick. We're day trading, right? We're day trading. We are day trading. So we're looking to see where do we get in. You see price here. Market opens. We try to move up. We go into this level because you already have this level. If you guys put your levels on your charts on Sunday, when you're supposed to plan for the week, these levels are already there for you when the market opens. They're there for you to trade when the market moves. So what is your job to do? Your job to do is sit and watch to see what price does at these levels. So for example, here, the market opens. We try to run up. We try. We have a strong green candle. Now, after this strong green candle, it should be followed by a next strong green candle breaking this resistance and then continuing its way up like it did here, like it did right here. Okay, but it didn't. We got a strong green candle. Yes, we reclaimed the VWAP. Now, people that trade the VWAP going long when they see that it closed above the VWAP. So then they're in long because that's their strategy. So they're in long. What happens here? That it comes back below their VWAP. So it comes back below the entry. The only reason why they got in was because it reclaimed it. That's the only reason why they're in. So the moment that it goes back down, that invalidates the move. It invalidates the move to the upside because you got in because it was above. Now that it's below, that's letting you know it's not going to move up. So you can do two things. You take a small loss. You take a small loss and then bet to the downside because we are rejecting here, right? And then you bet to the downside. As it comes down, we have pre-market low here. This is your pre-market low because this is the lowest it's got. As it works its way down, we break below pre-market low. So then you're watching the pre-market low because in your head, you're like, okay, we got to hold the pre-market low. This is where we got to hold. If we're going to drop, this is where we got to hold for today. And this is where you got to bounce. So we get this drop. Look at this right here. This right here that you see here below the pre-market low, this is a fake. This drop right here was to pretty much trap the bears, the people getting to the downside. So we go down, we trap the bears that trade the breakout. You know, this is attracting the breakout traders. So they get in. They get in for the continuation down, and what happens? It reverses on them. We reclaim the pre-market low again, right? We get back above pre-market low. Now we're holding pre-market low, and we're breaking back above the VWAP. We're breaking back above the VWAP. Okay, so not only are we breaking the VWAP, but this green candle is so big, it took out all of these. Look, it took out this high, this high, this high, this high. It took all of these highs. So this is telling you that buyers are in control right now. And buyers took it above this resistance, which they couldn't before, but now they did. So now that they did, you go in again long. I'm in long again. I'm going to try it again. And then this time it actually works out. Okay, so let's say you get in long again and then this fails. You get out when it gets back under. You get out when it gets back under. Now, two things you can do here. It gets back under your line, you can exit just because it went back below your resistance. You can take a small loss. Or you can wait for let it come back down, test the VWAP, see if the VWAP holds, which it should. If we're going up, this should hold for the continuation up. And if it does hold, then that can be your entry. So if you get in here and it goes against you, you have the VWAP to back you up. The VWAP is like your last line of life. If we get below the VWAP, then that's your exit. That'll be your exit. So this will be, so let's say you get in here for long, you get this ride. That's the day trade. You just did a day trade. Let's go to another day. This is another day. So remember this level we had yesterday that we couldn't get past? No, today we're waking up under it again. And look at the VWAP. We have the VWAP. So as we trade under the VWAP, sorry. So as we trade around the VWAP, you decide, do I go in short at the rejection of the VWAP or do I want to go in long at the hold of the VWAP? That all is a matter of preference. What are you comfortable with? If you're shorting at the VWAP, you need to have a level down here. You need to know how far down it can go. Or if the moment you see that it's not going to continue down, then you cash out on the way down. If it reclaims the VWAP, you want to see how far up it goes. So make sure you have levels above. That way you know how far up is going to take you and where you can cash out. So I want you to see how the day works with your levels and the VWAP. VWAP, again, the yellow line. This is the same yellow line we've been watching since Monday. Boom, we try again, we failed. So now that you know that this yellow line has been failing since Monday, you can automatically take it short when you get close to it. As you get close to it, you see weakness because the candles are getting smaller. So as the candles get smaller, that's giving you weakness. You go in short. You have at least the VWAP as your first target, and you have this level right here as your second target. So then you're getting short here to here. That's like 2 points. From here to here, you got 2 points in a matter like probably 30 minutes? From here to here, the rejection. And this is, I'm looking at the 5 minute. I'm looking at the 5 minutes so you guys can get a clear view, a cleaner view. And let's continue. We're still under the yellow line. So that's letting you know that we're still trending down. Look, here we don't even see it no more. How far down are we? All the way over here. So notice how here, the VWAP. VWAP rejecting, rejecting, rejecting. You have a level here. So then if you don't know if you should take it short here because it's rejecting and you have a support right here, you wait until this support breaks. We're under the VWAP, so you already know we're bearish. We're under the VWAP, so you already know that the move is down. Now, where is your entry? Well, your entry can be at the break of this level. At the break of this level, you get in short. So you could have taken the short here. You could have taken the short here at the testing. Notice how it came back, tested the VWAP. Look how small the candles got, and then rejected back down. Now, had we broken above the VWAP, and we could have done a lot of small candles above here, we would have worked our way back up. Here we go again, the VWAP. With our levels, we already had this level here. So notice, if let's not another thing that you can do. Let's say you're not a VWAP trader. Let's say you're not a VWAP trader. Okay, let's remove it, and you just have your levels and maybe your average lines. So, and probably this, an indicator. So as you see price come down into your support, and you see that price starts to pick up as it goes into it, you can take a risk right here, right? You can get in long, making this your stop. Also, this is the pre-market low. So if you see that you have a pre-market low, just do it right here. Let's pretend none of this happened. We have a pre-market low. Let's pretend none of that happened. At a pre-market low, market opens, we come down into your pre-market low, you see it holds. You can take a call. You can get in long here. You get in long here, your stop is the moment it breaks back below here. If it gets back under this line, that's your exit. That means that this is not going to work. This is not going to work. So you go in long here, and this is your first target. Because it's obviously this is closer, so there's a magnet to it. This is your first target. Now, if this target happens to clear, we come to this one. Okay, but we have to hold here. It's a must. It must. There, first target. You pay yourself. Always want to pay yourself when you get to the first target. Why? Because you don't know if when it does reject and it does pull back, you don't know if it's going to hold the new support around here or if it's going to continue to drop. So you always want to make sure you lock in some profits and then wait to see how far down the pullback goes so you can get back in. So, okay, see, so here we come back down. We're testing the low of day. It was pre-market, became a low of day. We're testing it again, and it's holding. So from here, you can enter long again and target here again. And if this clears, we'll come here. So the same thing applies again. We're trying it again. We're getting in long. We're going to see if we can get here, cash out, and then cash out. And notice how we came, get it to the middle zone, but managed to get back above it. You see that? Managed to get back above the line. So this, you could see this as a trap, depending on where the market goes. So then the market did nothing. The market did nothing in the rest of the day. So today was probably a chop day. I connect my highs so I can see going into the next day how we're going to look. And if I was to extend this line, it'll probably end up somewhere around here, and we're opening above. We're opening above. So let's say this zone, the same one we had yesterday, the same one we had here. We're holding it again today. We're here again today. So if you're nowhere here today and you're seeing that the candle is holding, market is holding, then this could be an entry. You can get in here long, target this level again, target here again. This is your stop. So that means that if price comes down against you and falls below this, you exit. You got to get out, because that means that it's not going to go in your direction right away. You want to cut your losses small and just wait how far down it'll go before you can get back in. Okay? So in this case, you go in long. We never went down from this candle, so there's no reason for you to get out. And then you ride it up as close as you can to this level. And then that's your exit. Here, we managed to break above. So that's pretty much how you trade your intraday levels. You see, you just have to have your big picture. You have to have your big picture with levels, the bigger picture view, because you need to know what the market is doing in the bigger picture. Then you come down to the 15-minute for your intraday, The 15 minutes is going to help you for the intraday, right? You can have a better view of your levels, know how far up is going to go, how far down is going to go if it rejects certain levels. And then you go down to either the 5-minute or the 3-minute, depending on what time frame is that you trade. I usually do the 3-minute. This is the one I watch. I do the 3-minute and the 1-minute, but the 1-minute is a little too fast for beginners. You don't want to touch the 1-minute unless you're more confident in what you're doing. So you want to stick to the 3-minute. The 5-minute, the 5-minute will keep you in a trade a little longer. The 3-minute, then you can just, it's at least to me, it's perfect. It's not too much and it's not too little. So notice here, the 3-minute, we come up here. You see this? We tried. We couldn't take this high. We did a lower high. We just managed here. We tried again to break up, and we just couldn't take this high. So this right here is telling you this is weak. This is weak. If we can't take this high, we're gonna come down, and that's exactly what happened. So you could have taken a short here, 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 anywhere around here. You could have taken a short, and your stop would have been the break above here. If it would have broken up here, that's your stop. So there, that's my stop, and I'm in short. I'm in short, and all I'm doing is waiting for the breakdown. Okay, that's pretty much how you would trade the intraday levels. You always want to have your levels, guys. Put your levels on every Sunday. That way, as the market works throughout the week, you have your levels that you're running into, and you know what to expect. Amazon. Now, Amazon, we had a rising wedge. We broke down, right? We broke down, lower high, came back down, tested. So if history repeats itself, I'm expecting a rejection here. This white line, I'm expecting it to reject and for Amazon to continue to come down to this zone right here. This is where I expect Amazon to end up. 116. This is the line we need to reject. Guys, make sure you have this line on your charts. This is the line we have to reject. This is the lower high trend line. So I know that every time price goes there, it usually rejects. So I'm very, very careful on what it does there. Are we going to break up or are we going to reject? And that's where I look for. I look for to see what the candles tell me. Are they strong or are they weak? That's what I look for. The VIX. Let's go to the VIX. The VIX. Last week I told you guys we had a falling wedge. We broke out. And this is the move that I was expecting. So if you go to the next week, you can kind of see how I had these lines on there. Now, what did I do today? All I did today was adjust this one. Adjust this and this one. We pulled back into the buy zone, right? We just kind of chopped around above where buyers were supposed to step in. We came and we touched it. And as soon as it touched this, look, boom, buyers stepped in, defending that zone. So this is telling me that in the coming week, the VIX should eventually end up here. Right here. Somewhere around here is where we're going to end up. Okay, we break out, come back, back test. Oh, this is perfect. This is perfect. Okay, look. Notice how here we broke out. We came back because this zone was never tested. It was resistance. It was never tested. It just kind of gapped above. So it's like, it's like in the air. What is it? Is it support? Is it resistance? What is it? We don't know because it hasn't been tested. It was resistance. Now we're all the way up here. Now we needed to come back down to test as support, hold, and give us a higher high. And that's exactly what it did. It gave us a higher high, higher low. So then here, if we're moving up, if we're trending up from here, I am expecting a pullback to a higher low, which is the reason why I selected here for buyers to step in, right? Because this is where the pullback I was expecting, buyers to step in and then continue to work our way up, giving me a higher high. Higher low, higher high. That's where we're going to be looking for the VIX. And if that happens, then the market is going to sell down. You see, now if I was to add a channel here, look how perfect that channel would have been right there. Then you make a yellow. There. And also look at this. Crossover. We have a crossover right here. So we have a crossover, which means that a shift in momentum to the upside is going to happen. So that's what I'm going to be looking for, to see if we get that shift to the upside and target this resistance up here. But no, look at here. Top channel, bottom channel. Top channel, we got a little overextended. Market came back into the channel. And then we should work our way up to here now. Work our way up to here now. Okay, that's what we're going to be looking for on VIX. So guys, again, I cannot stress enough how important it is to have levels on your chart. If you're just eyeballing it, you're going to fail. If you're just eyeballing it, you're going to fail because you don't know how far up the market is going to go. You don't know if you have a resistance above. You don't know if you have a support below. You're lost. You don't have signs. You need these levels. Label your levels. Label your charts, label your entries, whatever it is that you need to do. But you need to have levels on your charts. That's the only way you are going to keep up with the market. These are the rules that you set for yourself. You got to follow them. You're not going to make it if you don't follow them. All right, guys, make sure you get these levels on your charts, and let's see how the market opens going into tomorrow. Good luck.